Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 349 on November the 15th, 2024. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on SoundHound AI, New Holdings, and Intel Corporation. And we discuss three new trades on Plug Power Inc., Lyft Inc., and Norwegian Cruise Line Holdings. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, the market's pulled back a bit after last week's high prices. The Dow Jones Industrial Average lost 544 points, closing at 43,444 points. The S&P 500 index lost 124 points, ending the week at 5,870 points. And now it's time for the topic of the week. The topic of the week is all-time highs. Now, it's not easy trading all-time highs. I don't like to sell strength, but it tends to be more room on the way down than heading higher when you're at all-time highs. That does not mean I'm suggesting that any of you start buying puts and selling calls or shorting stocks or anything like that. This is just the challenge of all-time highs. In the commodity business, we always said the answer for high prices is high prices, meaning that at some point, the market would correct itself one way or another. The same mechanisms don't necessarily have to take effect in the equity markets, but there's only two places where stock can go when you're at all-time highs. The first, of course, is heading lower. It is not unlikely that we'll see lower prices for a little bit. The price can always go higher as well. And I don't believe in picking tops or bottoms. That's what makes an all-time high so difficult. My goal is simply finding high probability situations for my trade ideas. I limit risk, and I try not to be the buyer when everyone else is about to exit and sell. That's the danger of buying all-time highs. As we've seen this year, all-time highs can lead to new all-time highs also. Typically, there needs to be a new reason or focus to create those new highs. Maybe it's exuberance about a new presidential administration. That can also mean new money entering the market via newly created ETFs and other types of funds like we saw in Bitcoin. Just also be aware that we are entering the last several weeks of the year. We will likely see fund managers who have enjoyed amazing returns this year starting to exit the market by selling their positions in order to cover any end-of-year customer withdrawals from their funds. You still have to have the money to be able to deliver to customers even when you knock it out the park. So you will definitely want to just stay on top of things towards the end of the year. All-time highs can be tricky, but they can be extremely profitable as well. I hope you're on the right side of the trade these days. So that's it for the topic of the week. Let's go ahead and get into the trading review, or the review of last week's trades. We're going to start off with the covered call on SoundHound AI, symbol S as in Sierra, O as in Oscar, U as in Uniform, N as in November. At the time, the stock was trading for $7.20 per share. I looked at buying stock and selling the December 8 call at 71 cents, hoping for a return of 20.97% in 6 weeks. Well, shares of SoundHound AI lost 84 cents, ending the week at $6.36 per share. The call option we sold lost 41 cents, leaving us with a net loss of 43 cents if we were to close the trade out immediately. Now, with 5 weeks left until expiration, I certainly would not look to close this out just yet. We could always roll the call option down to the $7 strike. That would net us another 47 cents, which would offset the loss for the week. It would also change the total economics for the trade. Now, we're 13 cents below the break-even price, and we have 5 weeks left. That means we are losing 13 cents in reality right now. So I'm willing to hold off a bit just to see if price is going to head higher again, allowing me to keep my original profit and economic goals for this trade. So I'm not planning on making any adjustments on the trade just now, but you definitely have to have a plan for the future. Next up, we've got the credit spread on new holdings. Symbol N as in November, U as in uniform. At the time, the stock was trading for $15.22 per share. I looked at selling the December 15-14 put spread at 35 cents. That could give us a maximum possible loss of 65 cents per spread. Now, shares of new holdings lost $1.17, ending the week at $14.05 per share. That out of the money put spread that we sold is nearly all the way in the money now. In fact, it has an intrinsic value of 95 cents at the moment. That's not good. If I close the trade fully right now, I would lock in a loss of 28 cents. Selling a higher strike call spread isn't going to pay me enough money to make it worthwhile either, meaning selling the Iron Condor isn't the best option for an adjustment at this point either. The main question is whether you want to lock in a 28-cent loss, which of course is less than the 65-cent possible loss, or you can give this trade a little bit of time to see if price will push back higher in the coming weeks. Once again, I see time as a viable option in managing this position, both of these positions actually. So keep an eye on the spread values and the stock price to help manage the risk of further loss on this trade. And finally, we had a debit spread on Intel Corporation, symbol I as in India, N as in November, T as in Tango, C as in Charlie. At the time, the stock was trading for $26.20 per share. I looked at buying the December 25-26 call spread for 61 cents. That could give us a maximum gain of 39 cents, or that's a 63.93% return in 6 weeks. Well, shares of Intel lost $1.85, closing the week at $24.35 per share on Friday. The in-the-money call spread that we bought is now out of the money. The call spread can be sold to lock in a loss of 29 cents, which of course is less than the possible 61-cent loss on this trade. Now the stock is $1.26 below the break-even point. That certainly justifies closing this trade early. You'd be justified, of course, in waiting a few days as well, just to see if the stock looks like it's going to recover at all, like what I mentioned with the other two trades. Now, for anyone wanting a black and white response of the 3 trades from last week, this is the one I would strongly consider closing and just walk away from altogether. Now, remember, our goal is always to minimize risk and lock in a profit. So turning a possible 61-cent loss into a 29-cent loss certainly qualifies. We'll get them on the next trade. So remember, we trade in order to be able to trade the next day. We never go all in on any of our trades because we know there are going to be new opportunities tomorrow. So these 3 trades didn't work out as well, largely solely because the market really came off. And when we were looking at putting them on, the market was at all-time highs. So I'm not convinced that that's the end of the all-time highs. So I'm going to adjust the trades as needed, but I also want to, leave a little bit of room in the event that stock does rally again and that we end up making our money. So that's it for the review of last week's trades. Let's go ahead and get into some new trades for the week. Of course, before we do that, today was the expiration for all monthly option positions in November. All new trades on today's show will use the December 20th expiration for December monthly options. So we're going to start off with the covered call on Plug Power Inc., symbol P as in Papa, L as in Lima, U as in Uniform, G as in Golf. The stock ended the week at $1.87 per share. I'm looking at buying that stock and selling the December 2 call at 17 cents. That could give us a return of 16.04% in 5 weeks. Now you enter this trade by buying stock for $1.87 per share and selling the December 2 call at 17 cents. This trade makes the most money if stock prices finish above $2 per share. The break-even price on this trade is $1.70 per share, and in real terms, the stock purchase would require $187, and you'll collect $17 for selling the option. Next up, we have a credit spread on Lyft Inc., symbol L as in Lima, Y as in Yankee, F as in Foxtrot, T as in Tango. The stock ended the week at $18.12 per share. I'm looking at selling the December 18-17 put spread at 37 cents. That could give us a maximum possible loss of 63 cents per spread. Now you enter this trade by selling the December 18 put at 94 cents and concurrently buying the December 17 put for 57 cents. This is a credit spread because we're selling the spread, and this trade makes the most money if stock prices expire above $18 per share. The break-even price on this trade is $17.63 per share. In real terms, you'll receive $37 per spread that you sell and have $63 at risk. And our final trade on the week is going to be a debit spread on Norwegian Cruise Line Holdings, symbol N as in November, C as in Charlie, L as in Lima, H as in Hotel. The stock ended the week at $26.42 per share. I'm looking at buying the December 25-26 call spread for 64 cents. That could give us a maximum gain of 36 cents, or that's a 56.25% return in 5 weeks. Now you enter this trade by buying the December 25 call for $2.27 and concurrently selling the December 26 call at $1.63. This is a debit spread because we're buying the spread, and this trade makes the most money if stock prices expire above $26 per share. The break-even price on this trade is $25.64 per share, and in real terms, you'll pay $64 to enter the spread, and your maximum gain is $36 per spread. So that's it for this week's show. Thank you guys so much for listening and following along. Of course, I told you last week, I recorded that show from my hotel near Times Square. I am back home in the comfort of my home as I look around this room. I have my paintings, my bike. I have a beautiful piano, a drum set. I did grow up playing music. Did some marching band as well. Definitely a musician. It's just nice to have my creature comforts around. And then, of course, I have my library, roughly 1,500, 1,600 books. I don't know. I need to count them all up again because I've got quite a few, but I like my books. So that's it. It's lovely to be home. It is wonderful to record the show from home, and I really appreciate you guys listening and sharing the show. So thank you so much for going on this journey with me. Hope you have a wonderful weekend, and as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.